Good morning, everyone. Happy Wednesday. Thank you so much again, folks, for always watching my videos, supporting my content. I really appreciate your love and support. And if you haven't watched my video from 2 days ago, the Bulls Get Torched video, lots of important information in there, and just information about how to understand market psychology and read other people's psychology as the masses and be able to fundamentally gauge and understand where the mindset of the average retailer trader is at. Okay, and this way you could position yourself whether it's short or long or waiting to be in a position. All right, and I mentioned in here some of the key lessons to learn. Whether you're listening to people on crypto Twitter or you're seeing it in technicals, it all typically comes down to the same conclusion, which is that people are more than often emotional in these markets. All right, and those emotions actually convey in the charts. All right, every single one of these candlesticks are basically a human or an algorithm or a professional making a decision about buying or selling. And when you collect, when you aggregate all the price data in the candlestick, then you can see the decision of whether there were more sellers right here versus buyers right here, whether you see a bit more weakness in terms of strength of the RSI on this push versus this push, or this push versus this push, right? And then you can start turning on volume and other indicators, but more often than not, you can tell almost 80% of what's happening with just looking at price like this, okay? Price tends to move in ranges. All right, that's the first thing you need to understand about price action. Okay, price tends to move in ranges, and it is pretty clearly defining to you the range it finds the most liquidity in. Whether it's finding good support and liquidity right here around 8600 area right there, right? You could see even when price pushed down past it, it grabbed more liquidity and pushed up again. Okay, so clearly there's a lot of buyers sitting in this particular area around 8600. And then we can make the same argument up here, which is that, well, there's a lot more sellers up here too, around 8800. So this $200 trading range is really what we're watching right now. And we're thinking that, okay, well, who is the stronger body in this particular range? Is it the bull or the bear, right? Personally, I think it's the bear because when you start zooming out to higher time frames, such as the 4 hour, you can clearly tell that price has been putting in this high, this lower high, and this lower high, and another lower high. All right. Now we could definitely get, maybe a push back up again, maybe another $100, $200 or so, but that doesn't mean the trend has changed, right? To see a significant trend change in this particular area right here, you'd at least first want to see a break above that marker right there. Okay. Now you're probably wondering, okay, why did he pick this marker? Right. So this was really this area right here. That was the last consolidation before this sharp drop. And you can see even after that sharp drop, we came up to that area, tried to retest it as resistance, didn't even hit that high. All right. So all we did was drop, move sideways, push up, short squeeze, and then drop again. So that tells me that there's, probably a lot of significance to this particular area right here around $9,200 to $9,260. Okay. Now, you can say that, okay, well, what are some other areas too that are a bit more closer? Well, you could say, first things first, if we break past and close above this area, say on a clean 1 hour close, meaning a full candle body must open and close above this area, so that's around 9,060, right? Then I would say, okay, then we can make the next target 9,260, like I showed you earlier. Okay, so that's a $200 move. So don't try to worry about sort of catching these bottoms right here or right here for longs. Okay, and don't try to worry about catching this area right here for shorts or this area right here for shorts. In our community, actually, we did have a good amount of shorts in this area, I think, and this area right here, and then closed out down here. And then this area right here, we actually, I think, closed down here. Or actually, I'm sorry, no, that's a lie. I think we opened a short right there, and then we closed down here. Okay, so that's kind of where we are right now. Looking for positions. Honestly, I had a small position this morning, right around I think 87.50 or so. I got in. I want to show you guys that. Okay. So here's my short position, very small profit. We had a full 1 hour close below 87.50. So I was looking at this area right here. All right. So I was looking for a close like right around this area. Or actually, I'm sorry. I think it was over here. Okay. And I think overnight, price probably went back up, but didn't hit my stop up here. Okay, but then it came back down around 87.17, which is that blue marker that I was waiting for. So I closed out my position right around like 87.20. All right, and the reason I did that is because again, okay, if we look at this blue marker, right, and you could say, okay, why is that blue marker significant? Okay, so you can see right there, price moves above it, gets rejected. All right, price breaks below it, gets rejected, and then gets pushed up. All right, price again breaks below it, gets pushed back up, comes back to test as support, push back up, support, push back up, and then finally breaks through, right? And then over here it gets rejected, boom, breaks through, comes back at it as support. So what I'm trying to say is there's something happening in this area right here around 87.20 that a lot of bulls and bears are kind of trying to either push the prices up or drag the prices down. Okay, so far the strength is on the bull side. Okay, and how do I identify that? Well, we can already see price has already hit it once, right? Hit it twice, so now I'm expecting at least a nice pop, all right, out of this blue area. So as long as price stays above this blue area, okay, um, you know, the bulls have the upper hand, okay, so they can either drag the price back up to 87.85, or they can then target the top of this range. Okay, so remember the parallel channel, this trading range is the high of about 88.80 to a low of about let's see, where is that, 86.80. Okay, so that $200 range. It's a bit hard to see, I know, but just, you know what, let me see if I can make that a different color. And let's see if that works. Okay, there we go. I think that's a better way to look at it, right? So the purple range is what we're looking at right now. Okay, so I think there's actually more stops to exploit probably up here. Okay, in this particular region, which is the top of the trading range right around here, I would say there's more stops to exploit up here. Okay, so I figured that at some point price could make it back up into this area right there. All right, so that's what I'm paying attention to now. I really don't want to be in a short right now because what I was really hoping was, if you look over here, right? So what happened was, this garbage spike up where everyone thought that we were going to go higher and people criticized me for shorting, right? I rode this down all the way, okay? And then what happened was we broke down under this trading range, okay? So that was your first deviation. Then we pushed back above the trading range and I thought, okay, well, maybe we could be going higher. But look, then we pulled back down under it again. And we actually created a lower low right there. So that told me that, okay, there's a lot of weakness right there. So I had actually placed a short right around 86.75 and I got stopped out somewhere up here. Okay, so I have my own losses too. And everyone likes to show you their winners, but here's my loss. All right, as you can see, I got into an 86.75 short. My stop, where was my stop? I can't tell. 87.70. Okay, so let me show you guys where I got stopped out. So I got in somewhere around here, and price, just kept pushing and pushing. I think I got stopped out by this wick actually. Okay, so I got stopped out there, but then look, price went even higher. So if I would have held on to my position, I would have been kind of deep in the negative, and I don't know if I would have, held on to that position even higher. So that's why it's important to place your stops and stick to them. Okay, that's probably the one main thing you will learn about risk management is define your risk before you get into a trade and know when you're willing to get stopped out. Once you get stopped, Don't enter back in till the trade is then more favorable to you again. Okay, and so the trade wasn't really favorable for me here or here, but it was favorable for me when prices started to break down below this area. Okay, so I figured this could have been a double top, could have been bleeding lower, and I placed my stop up here. I figured that if I get into a short here, there's no way price is going to go back up here because there's decent amount of selling that already happened up here, and over here. So I figured even if we make it back up, there's probably not going to be that many sellers. So we'll probably just create a lower high. And that's exactly what we did. And I just closed out for a very small gain right there. Okay. So the point is that, trading is about these possibilities and probabilities. Okay. You don't really know exactly where price is going to go. You have a decent idea, with technicals, right? You have a pretty good idea when you start looking at different time frames, trading ranges, etc. But you still don't know if your trade is going to be successful. That's the point. And more importantly, the follow up to that is you actually don't need to know where the price is going to go. Okay. Oftentimes, I like to play a game where I like to look at as many, pros and cons to set up the case for my long or short. Okay. And I say, all right, you know what? After I place this trade, I'm just not going to look at the market. All right. And then I just completely walk away and don't look at my positions till, either my position has been validated or invalidated. Okay. That to me is truly the essence of trading because honestly, if you really have enough sort of reasoning to go short or long, and then something randomly happens in the middle, all right, that forces the trade one way or another, you can't always be available to move that position into a close, right? So let your stop be hit or let your target be hit and just get taken out of the position, all right? Because the goal of trading is to allow you to get more freedom, more time, more money, so you don't have to constantly be vigilant and watching the markets, okay? So when you assess your risk properly and say you're not in too heavy of a position, you know that you can walk away and know that you've defined your risk, you've defined your profit taking, right? And you can just kind of go do your own thing, all right? That's honestly the point of trading, okay? Not to spend, 10, 20 hours in front of a screen hoping that the price hits your target or doesn't hit your stop, right? Because that's just, kind of foolish. The market is going to do what it's going to do. You literally have no impact on the market, and neither do I, okay? All right, so sorry for the long spiel, but so here we go. All right, so again, we're still trading back into the range, right? Back into that purple range, and you can see that stops are still ready to exploit up here. Now, my other theory is that this point right here, I wrote this marker as bearish if price breaks this. This was when we had that initial run up here, and then price just bled back down. So I'm thinking that why can't price go like this and push back all the way up to that same area around 9,000 and then push back down? Okay, so that's just something I have my eye on as well. I'm not placing any trades as of right now. If you are looking for trades, the best risk to reward trade is probably a long right now. There's really no shorts that I could see. A long, buying around this particular area with the stop probably a bit deeper, around maybe 86.90, maybe just below this bottom of this trading range around 86.80 would probably be the best bet. So you'd probably be looking at something like this, right? So if you were to place a long where price is right now, say stop is right there, and your target is the top of the trading range, that's a 3.16 risk to reward ratio. Right, so that's pretty good. So you're basically risking $1 for $3.16, right? Okay, so that's kind of my thought process in that. Okay, so now let's look at the 4-hour. Here's where things get interesting. Okay, so the 4-hour is sitting on this green block of support, and again, I've pointed this green block of support out from this previous consolidation that we had right there before we pushed up massively, right? So what that tells me is, okay, we're sitting on this support. So we've already hit it once, twice, I don't really want price to come back to the support again. Okay. If it does, what I'm going to do is if it hits that support and pushes back up at any level, I'm probably going to short it. Okay. Because it shouldn't be hitting that area 3 times. I mean, 2 times, all right, that's fine. But hit it a third time, and then you know that this support has definitely weakened. Okay. And then I'd like to go short with probably a stop above that area right there. Okay. All right. So second thing is, again, the monthly open is around 91.60, right? So we can make the argument that we could have another squeeze as the weekend approaches, since these garbage squeezes typically happen as the weekend approaches or during the weekend. So we can have a short squeeze all the way up there. Okay. That's possible too. I'm going to get rid of this weekly open because I think that one's wrong. That's from the previous week. Um, that's another possibility. Let's see. Let's see where this other marker came from. Oh, yeah. Okay, so this other marker around 87.65. Okay, so notice how, again, that 87.65 marker was over here, previous resistance, right? And then support, 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 pushes back up, and then pushes back down under it. So I'm thinking that, all right, so we've now come under that area. We're using it as resistance, resistance, push up deviation, pulls back down, a little bit more deviation, pulls back down. And now I'm hoping that, okay, either price is really going to rip back down or it's just going to pull back down a little bit, stop out some people, and then push back up. Okay. I'm, as the weekend approaches, with what I was showing you about the trading range and the stops to exploit, I'm personally leaning towards this price maybe pushing back up at the very least to that $8,800, area where these stops reside, or honestly as high as this monthly open. Okay, just something to keep in mind. That's why I'm not really in a position right now. I'm kind of just waiting it out. I got my small gain in the morning, and now I'm just gonna see what the market is trying to show me. Okay. But again, if you're not understanding these technicals, folks, come join Cryptosomniac. I have a whole technical analysis course that you can buy. And once you buy it, just shoot me a message right here and say I bought this course. So I'll give you 7 free days in this advantage community. That's all the locked channels that you see right there. Okay, pretty active community as you can see, and tons of trade setups that yield people some pretty good gains. All these people have been really enjoying our community and really taking advantage of the information that we provide, the education, the trade setups. Though this is not financial advice, but you could clearly see that people are utilizing my trade setups, how I trade, for their own benefit. And like I showed you earlier, right? I'm gonna have my losses too. Okay, I'm gonna have that kind of loss right there. Okay, but with that, I'll also have some pretty good gains like that one. Okay, like that one, like that one as well. Okay, you'll also see some of the small losses, right? So the point is that I always try to mitigate my risk, having my stop exactly near invalidation levels, or knowing exactly when to just sit out of the market and just wait it out. Okay, and as you can see, you're probably wondering, okay, why the heck did he just take profit on only just a $30 move? Well, because I'm not seeing what I want to see in the market. Okay, you can't expect me to sit tight in the market knowing that I'm literally seeing that the market could move the other way, right? So that's just foolish. Okay. So anyway, this video that I made 2 days ago, it also pointed out to the foolishness of most people who have these unrealistic expectations of how the market should move because of their bias or how heavily they are in positions. Just because you bought BTC or $100 worth of Bitcoin doesn't mean it has to go up. That's just dumb. Okay, you have no movement on the market. Neither do I. But at least I know that when I see the big whales, the professionals moving the market one way, I know to get out of the way or jump along with them. Versus people who criticize me, are typically folks who are trapped in positions and they're pretty much all into their trade and they have nowhere to move, and then they're sitting at losses, right? And then they're hoping and praying the market should move back up. Those people do not know how to practice risk management. And that's why more than likely they'll probably lose all their money. Okay. But in our community, one thing at least I can guarantee you is that I will save you from making mistakes. I will save you from FOMO. I will save you from panic selling, and I will save you from making bad technicals decisions. Okay, so I can't guarantee you profit, but at least I can save you from making mistakes by yourself. But clearly, the profits are there, right? You can see in my positions that I've taken. You can see in other people who are taking the positions that I'm taking. They're seeing clear profits right there, right? So the point is that people in this community know one thing, which is that the market is not guaranteed to do anything for you. It's all about the risk reward and risk management, right? If you set your stops properly, you understand the structure of the market, you understand where exactly your take profit zones are. Just get in, get out, have fun. Okay, that's really what the market should be about. If you're making it anything more and you're very overexposed to the market, more than likely you'll probably lose all your money sooner or later. Okay. All right. Daily chart, nothing really to watch out. Again, I had stated that you know I'd honestly hope for this candle right here to close below this black marker, which is about 86.75, and yesterday it did not. It closed at 88.19. So personally, the way I'm looking at it is I think this could still make a rounded move over here to about 9,000, or this high right here around 91.50 or so. That's why I'm a bit more cautious. Okay, and I also see people posting something like this, which is kind of like your typical sort of falling wedge that you're seeing right now. All right, so I do agree with that. I mean, I do think that this is a falling wedge. I guess you can maybe even call it like a bull pennant, with this being the pole right there. I kind of prefer more or less a falling wedge, because we've kind of retraced multiple days. I mean, this was only 3 days of the pole, and now we're almost 2 weeks into the pennant, right? So I don't really agree with that. But falling wedge, I could agree with. Okay, so if we're falling out of that wedge, that target. Okay, so the target then becomes, if we do a measured move, right? We say from this high to this low, we can put that out there. If we break out, let's just say today or tomorrow, that puts us up into this red block right here around 10,000. Okay, so that's a pretty sizable move, but I still think there's way too much resistance around 94, 95, $100. Okay, so we'll have to see exactly how that goes. But again, I'm not as bearish at this particular price point just yet, just because I didn't see the daily closes that I wanted to see, and the daily is a pretty important time frame for me to watch. So I'm just gonna wait it out. All right. On the weekly, I mean, again, nothing about this this weekly and then these 3 weeklies says anything bullish. Um, for those that are saying that this has to be bullish, I don't know where you learn your technicals, but this is not bullish. This is not bullish when you look at a lower high, and another lower high, especially when this particular area right here was all support, and now all this thing did was hit it as resistance. Okay. And even on the 4 hour, I mean, you definitely want to see a 4 hour full candle open and close above this red area. So that's around $9,700. We haven't done that yet, so we'll have to see, if we're truly going to go higher or if we're just going to keep bleeding down. All right. So those are the levels to watch, whether it's in the 4 hour, the daily, the weekly, the monthly. I mean, let's see the monthly. Okay. So here's our monthly open, right? So I mapped out these yearly highs. Okay. So for 2019, that's the yearly high, or I'm sorry, that's a yearly high, that's a yearly low. All right. And you can clearly see, I mean, if we map out just a year, right? Just the year, not the all-time low, or not the all-time low, but rather the December 2018 low that we had. All right, so if we just do a fib on that, okay, so we're sitting just above that 50 fib. And also we had actually tapped the 618 fib just a couple of weeks ago, beginning of October or so, or I'm sorry, middle of October or so, right? So that tells me that, okay, if we're truly to be bullish, right, we need to see this monthly start climbing above this 382 fib. That's how, if you want to utilize fibs, that's how fibs work. You need to see once one level hits, the next level must be broken and closed above. And then the next level, and then the next level. That's really how prices should be climbing. But that's really not the case right now. So far, what I'm seeing is this candle wants to come down even more. I mean, we still have, let's see, we still have about um, 17 days left to go. So, this could push back up a little bit more and then pull back down. But we need to start closing above 9160 on the monthly for us to feel that, prices have a bit more strength to keep pushing higher. Until then, this is really, to me, a chart that could easily keep going down. And this was really just a relief, rally candle. Okay? All right, so I've showed you guys, the smaller time frames, the larger time frames. I've showed you how price trades in ranges. Really nothing to see in terms of the RSI. I mean, this is really near neutral territory, actually just below neutral, right around 43 points. So we still, could drop down lower, or I guess, we could push higher into that overbought territory. So tons of room for the RSI to run. Volume overall, still really nothing happening in terms of the volume. This is, a classic sign of that wedge where price goes down, consolidates, and then volume tightens up too. So that is, that's why I'm looking more or less at this as a falling wedge. So if it does break out, we could expect, some targets higher. Okay. All right, folks. I think I'm going to wrap it up. I think that's it. Again, come join Cryptosomniac technical analysis course for 7 free days, or join our Advantage community for these kinds of gains that you're seeing. And again, if you enjoy my content, if you really want to see more information on a day-to-day basis, if you like more Bitcoin analysis updates, and you like these videos, I provide these videos twice a day for my Advantage members, and then obviously multiple updates through the day. As you can see, we have a leverage trading channel where I show people exactly what I'm looking at, what I'm interested in, where I'm looking to long or short, where my stops are, profits are. Everything is really just structured and laid out for you. Okay, so if you want to get into a trade, you know exactly what my thought process is, levels to watch out for. And I really don't think a lot of people, in the crypto space do that, because honestly, they're new and they really don't know what they're doing. More importantly, I don't think they know how to manage their risk, right? So if you don't know how to manage your risk, I mean, you're a shit trader anyway, right? You can only get so far with lucky calls, when you catch that 50 or $100, or I'm sorry, 50% or 100% pump, okay? But to consistently win at your trades and to be able to be profitable in this market, down the line, you got to be patient. You got to understand what the market is trying to do. You have to understand, the kind of function, the market, or the market, how it functions, and how it's trying to exploit, whether the bulls or the bears. Okay. So market psychology, being able to understand technicals, being able to understand, how markets function, laying out the technicals, and then more importantly, risk management is everything that we teach in our community. All right. So come join Cryptosomniac, folks. Hit the products page right there. Join Advantage, or buy the technical analysis course, or just come join the free Discord side. All right. There's also a link below in the YouTube description right there. That's the free side. That's only this right there, community discussion. That's not any of these lock channels that you see. Right. So all these lock channels have a ton of information. Right? Way more information. All right. So I'm going to wrap it up. Thank you so much for watching, folks, and have a wonderful day. All right. Cheers.